Victoria Scholar in London. She's an analyst at IG. Welcome to the show. Now, despite these recent gains, US stocks seem to be headed for a weekly loss with those inflation concerns. Tell me, are we at the end of this rally? What are the indicators that investors need to be looking at from here on out?
Yeah, I mean, it's been a very volatile week, particularly for the tech-heavy Nasdaq, leading those declines, particularly at the start of the week. But like you mentioned, it seems as though stock markets are now snapping those losing streaks, suggesting that perhaps it might have been a little bit more short-lived than we expected. And there are still reasons to be optimistic on stocks, including in the tech sector. You know, we've just come off the back of this quarterly earnings season, which saw some pretty strong performances for many of these tech stocks, which of course is supportive for the sector. And as well, we know that the global economy is enjoying the strong rebound, which is benefiting stocks as well. Yes, we are seeing that rotation trade away from those growth stocks in the tech sector that was performing so well last year and towards more traditional sectors like transport or banks. But that's not to say that tech stocks can't perform well as well. But you mentioned those key indicators. We just got those retail sales figures that you mentioned through. They came in line with expectations, 1% growth. I think focus is really on the inflation figures because that is the concern for the markets, that price levels could move too quickly to the upside.
Now, staying on the theme of the tech sector, one particular concern has been this chip shortage, right? Now, we've seen industrial metals rallying to record prices, really, and there's expectation of similar sort of trend with the massive infrastructure spending in the US. Do you expect this to continue? How can we expect that to impact the overall economy, price levels, employment?
Yeah, well, it's not just the industrial metals that have been rising in price. It crosses the whole commodities complex and beyond. We're seeing oil as well as wages. And this is this concern in the markets about inflation. Some of those who like to allay the concern suggest that inflation is actually just transitory, that it isn't a permanent thing or phenomenon. But there's little data to actually back this up. On the one hand, people are saying that, look, there is this risk of inflation, but that's likely to be offset by the deflationary pressures that we get from technology. Others are saying that we're in this super low interest rate environment. We've had this huge fiscal stimulus package. We're in a massive economic bounce. And this is likely to see a massive rise in price levels. And once growth starts to taper off, say into 2022 or even 23, we could see some major economies entering this dangerous situation known as stagflation, where prices are moving higher, but economic growth is still low. So that really continues to be the major risk for the markets. In terms of the outlook for industrial metals, though, we have seen an impressive run lately. There could be some profit taking, some consolidation in the short term, but heading into the medium term, there is the potential to move higher.
So metal is likely to rally, industry is likely to rally, but the gains of those might not be as well distributed as one would hope. Thank you so much, Victoria Scholar there in London.